Bitcoin has just surged to a new all-time high, surpassing $123,000, signaling a significant shift in the cryptocurrency landscape. This remarkable rise comes amid increasing institutional interest and a pivotal week for U.S. crypto legislation. Here's what you need to know. Looking ahead, the immediate focus for Bitcoin is whether it can maintain its position above this new record of $123,000. This significant milestone comes amid a surge in interest from both retail and institutional investors, driven largely by a growing acceptance of cryptocurrencies in mainstream finance. Investors and analysts are closely watching Capitol Hill, where lawmakers are expected to debate key legislation that could provide a more favorable regulatory environment for cryptocurrencies. Historically, regulatory clarity has been a double-edged sword. While it can legitimize the market, it may also impose restrictions that stifle innovation. If the discussions lead to advancements in market structure rules or stablecoin regulations, this could further fuel the rally and attract additional institutional investments, potentially ushering in a new era for digital assets. Conversely, if the momentum stalls due to regulatory delays or negative news, we could witness sharp volatility in the market. The fear of sudden regulatory crackdowns has previously led to dramatic price swings, causing investors to tread carefully. Expert analysts suggest that the next few days will be crucial, and investors should remain vigilant. The outcomes of these legislative discussions could set precedents that not only affect Bitcoin, but also the wider cryptocurrency ecosystem. As we navigate this rapidly evolving landscape, one must consider: how will this regulatory environment shape the future of cryptocurrency? The implications extend beyond immediate price movements. They could influence technological advancements, market accessibility, and international competitiveness in the blockchain space. As the debate unfolds, stakeholders should prepare for a transformative period. A well-regulated environment could enhance trust, paving the way for institutional adoption and broader public engagement with digital currencies. The coming weeks will be pivotal in determining not just Bitcoin's trajectory, but the future of the entire cryptocurrency market. The journey to today's Bitcoin milestone has been shaped by a complex interplay of market dynamics and institutional interest over the past months. Recently, Bitcoin reached a significant price point, marking a new record that has captured widespread attention. In the weeks leading up to this event, Bitcoin had been steadily climbing, driven by increasing institutional demand and positive market sentiment. Key factors included a significant uptick in ETF demand and the growing belief among investors that regulatory clarity was on the horizon. This shift in sentiment is particularly noteworthy given the historical volatility of cryptocurrencies, where previous surges often fizzled out due to regulatory uncertainties or market manipulation, leaving investors wary. However, this time, the backdrop of impending legislation and institutional support suggests a more sustainable rally. Notably, major players like BlackRock have shown increasing interest in launching Bitcoin ETFs, which has further bolstered investor confidence and contributed to today's record. This influx of institutional capital is significant, as it not only legitimizes Bitcoin in the eyes of traditional investors, but also provides the liquidity needed for further growth. The impact of this milestone extends beyond mere numbers. It signals a maturation of the cryptocurrency market, attracting a new wave of retail investors eager to participate in this evolving landscape. Additionally, as regulatory frameworks become clearer, the potential for broader adoption increases. This momentum could lead to enhanced stability in the market, encouraging more traditional financial institutions to engage with digital assets. Looking ahead, the continuing interest from institutional investors and the anticipated approval of Bitcoin ETFs may pave the way for a more stable and robust market. As Bitcoin continues to gain traction, it is poised to redefine the landscape of digital assets, potentially transforming the financial system and fostering innovative financial products. Bitcoin has reached a new all-time high, a development that is reverberating throughout the financial markets and capturing the attention of investors worldwide. This remarkable rally signifies a renewed risk appetite among investors, suggesting a shift in sentiment towards more volatile assets. Historically, Bitcoin has been viewed as a leading indicator for the cryptocurrency sector, and its recent surge may serve to validate the legitimacy of digital currencies in the eyes of skeptics. The rise has been fueled not only by retail enthusiasm, but also by a noticeable increase in institutional interest, as major financial players are beginning to embrace cryptocurrencies as a viable asset class. A significant factor contributing to this surge is the anticipation of clearer regulatory frameworks from lawmakers. This week marks the beginning of Crypto Week in Congress, where key discussions will focus on legislation that could fundamentally reshape the regulatory landscape for cryptocurrencies. The potential for a more structured regulatory environment has already begun to alleviate the policy discount that many investors have historically applied to crypto assets. As institutional investors gain confidence in the regulatory clarity, they are more likely to allocate larger portions of their portfolios to digital assets, further driving up demand and prices. For the average person, this rally is about more than just numbers on a screen. It represents a significant shift towards the mainstream acceptance of digital currencies. As cryptocurrencies gain traction, they are likely to influence individual investment strategies and financial decisions. The growing interest from retail investors is not just a fleeting trend. It reflects a broader societal change in how people perceive and utilize money. Looking ahead, the outlook for Bitcoin and the cryptocurrency market as a whole appears promising, but remains contingent on regulatory developments. If lawmakers can establish a clear and supportive regulatory framework, we may witness an even greater influx of investment and innovation within the sector. Conversely, any missteps in regulation could dampen enthusiasm and market growth. Stakeholders will be closely monitoring legislative outcomes, which will undoubtedly shape the future landscape of digital currencies. In particular, the establishment of cryptocurrency ETFs could revolutionize access for everyday investors, potentially transforming the financial ecosystem. On May 29, 2026, Bitcoin reached a staggering new all-time high of $123,000, marking a significant milestone for the cryptocurrency. This price surge was recorded at 11:30 a.m. UTC, when trading volumes spiked as investors reacted to bullish news. Major exchanges like Binance and Coinbase reported increased trading activity, with Bitcoin's market dominance rising to 60%. This remarkable jump extended a broader rally across the cryptocurrency market, which saw total valuations soar to approximately $4.13 trillion. What makes this event particularly shocking is the combination of institutional buying and a favorable legislative environment in the U.S., which has not been seen at this level before. Unlike previous spikes that were often fueled by speculative trading, this surge is backed by substantial institutional support and a growing acceptance of cryptocurrency as a mainstream asset class. Many large financial institutions, including hedge funds and asset management firms, have begun to allocate a portion of their portfolios to Bitcoin, viewing it as a hedge against inflation and currency devaluation. The legislative environment has also played a crucial role in this price surge. Recent regulatory clarity from the U.S. government has provided a framework that encourages investment in digital assets. This has led to increased confidence among institutional investors who had previously been wary of the regulatory landscape. As a result, the cryptocurrency market is experiencing a paradigm shift, moving from a speculative playground to a legitimate investment avenue. The impact of this surge is profound. Retail investors are now more likely to invest in Bitcoin, spurred on by the success of institutional players. Moreover, the increased market capitalization of Bitcoin and other cryptocurrencies has led to greater media attention, further legitimizing the sector. This momentum could also encourage more businesses to accept cryptocurrencies as a form of payment, fostering wider adoption. Looking ahead, analysts predict that Bitcoin may continue to rise, especially as more institutional investors enter the market. The current trajectory suggests that if regulatory conditions remain favorable, Bitcoin could set new records in the coming months, potentially exceeding $150,000 by the end of the year. The future of cryptocurrency appears increasingly bright, with Bitcoin at the forefront of this financial evolution. As Bitcoin reaches new heights, How will the upcoming regulatory decisions influence its trajectory? Share your predictions in the comments below, and don't forget to subscribe for daily deep dives into the world of cryptocurrency.